Robinhood, I don't understand why people keep using Robinhood, but if you look at Robinhood as well, from I think it was a year ago, there was a kid, I think it was 19, or I don't remember how old he was. He had negative $50,000 shown in his account.
Wow.
He killed himself because of that. And it ended up being a technical error on Robinhood's side, and that was inaccurate.
Hi everybody, this is Joseluiz Morales. Welcome back to the Morales Troop Show. Today we've got a very special guest, episode number 50. His name is Andrew Diaz. He is a stock market trader. A lot of drama going on in the stock market right now. WallStreetBets, Robinhood. He's going to be educating us on what is the future of the stock market and kind of educating us a little bit on what's going on right now. Welcome to the show, Andrew. How are you?
How's it going, Jose? Thanks for having me, man.
Good, man. So do you mind kind of just sharing a little bit of background, man? Like who is Andrew Diaz?
Yeah. So for those of you who are watching and don't know me, obviously my name is Andrew Diaz. I started trading back in 2009. So have quite a bit of experience in the trading world. I started at the age of 19. I was a single dad. So what kind of propelled that and kind of made me go into that space was one day I was working at the mall. I worked at Champs for $7.25 an hour, and I was going to JC at Ventura College. And what sparked it was one day I couldn't afford diapers. Right. And I have my parents that help me, and they've been there to help me throughout my journey. But of course, as a father and as a single dad, you want to be able to provide for your kid. So I'm a book nerd. I try to read about a book a week. So one of the things that I did was like, okay, well, let me go into the bookstore and see how and I can learn ways to make more money aside from what I'm doing. And lo and behold, there was this book, and I think I have it down here. If not, it's in my room. Oh, it's actually my #1 book. You can see it right there. Rich Dad, Poor Dad. So this book caught my attention, right? It says Rich Dad on it. I'm a poor dad. I want to learn how to make money, right? So it caught my attention. And then the first page, the first chapter says, the rich don't work for money. They have money work for them. And this was a crazy concept to me, right? Because I've always been taught, go to school, get your education, blah, blah, blah. So in that book, it starts talking about all the different things. And then it sparked my mindset. It talked about 3 critical things, right? It talked about investing. It talked about owning a business, and it talked about real estate. Well, at the age of 19, I don't have money to invest in real estate. I don't have money and that much knowledge yet to start a business. Trading seemed that nice parallel because I was really into gaming as well. And it was on the computers. So it was that nice shift. The other thing that I liked about trading and investing is that I can do it on my own time. I don't have to worry about customers. I don't have to worry about things like that. So that is how the spark happened. Fast forward to today, 2020. I have a bachelor's in biology. I have 2 master's degrees. I work at Amgen. I've been at Amgen since 2014. I work in quality assurance. So I've been able to put myself through school to have a career while raising a son and while trading, which that trading account has grown over time, where I day trade and I do long-term investing that has grown, to a multi-million-dollar portfolio. And in 2017, I decided to start a business. I helped a person that was a single mom, and she was a friend of mine. And at that time, 2016 was when I made my first million from trading. So I decided to help her. I helped her every day, and she ended up doing really well, took it upon herself. And then my wife was like, you should really make this a business and, help people. There's other people that can use this help. So then hence there's where Stock Market Wolf started in 2017. And we went from 0 followers, 0 members to over 40,000 followers today and over 5,000 active paying subscribers that get stock education from me. And it's a multi-million-dollar business. And
just so you guys know, he's the real deal, basically. Hard to believe, not hard to believe, but just because you're so young, you know,
Yeah.
people would imagine that it would take a 40 or 50-year-old to have like your resume, everything that you've accomplished, man. But I can attest to this 100%, man. So congratulations on all
Thanks,
that. You're somebody that I look up to and respect.
Nah.
I like to look at myself as like a complete newbie in the stock market. I don't know very much about it. I'm 100% a real estate guy, but whenever I have stock market questions, that I reach out to. So would
Appreciate
you
that.
just educating our users, like how does a stock market work? And yeah, how does the stock market work? Let's get into that.
Yeah. So basically, well, one of the things you need to understand when it comes to the stock market is there's a bunch of different things. I'm getting an echo, so sorry. So I'm trying to organize the audio. But one of the things that you have to understand, there's different realms within the stock market and that you can be involved in, right? You can be a day trader, which by definition means you're going to buy something today. And at any point, whether that be 5 minutes, 10 minutes, or at an hour, by the end of the trading day, you sell your position. So that is definition of a day trader. There's also swing traders that can buy something today and maybe hold on to it tomorrow or a week from now or a month from now. That is the definition of a swing trader. Then there's positional traders that will get into a position, whether they are looking to long or short, and I'll cover those definitions here in a second. A position based off of what they feel the stock is going to perform, and they can hold that up for 6 months to a year. And then anything after a year, you're looking at long-term investments. Now, when you are getting into the stock world and you're trading, anything that you hold a position and sell less than a year, there is a higher capital gain tax. Okay. Now you're only going to get taxed depending on how you do your taxes, right? So if you do them quarterly, you're only going to get taxed on the quarterly capital gain that you made. Meaning if I made $1,000 today and lost $1,000 tomorrow, I'm at zero. There's no tax that I'm going to get. But at the end of the quarter, if I'm up, $200,000, I'm going to get taxed on that $200,000 at the end of the quarter, right? So then that's something people need to understand about the tax piece. So that is just, the regular, I'm going to trade a stock in what we call an equity trade. Now there's also something called option trading, okay, where options, you essentially borrow shares, you control the amount of shares, but you don't own them. And usually with that, there's interest and there's other things that are involved. Then there's obviously trading, different entities, right? Like crypto and just other stuff like that. Me primarily, I am what you would consider a day trader. And on the side of that, I am a long-term investor. So that is kind of the space that I'm in. I'm not really into options. I do understand them, which we will talk about with the Gamestop and things like that. But to be considered an expert, I would not say I'm an expert in option trading. Now, for those of you wanting to get into the stock market and start to learn and do it, my first recommendation would be to get books. Okay, this is going to be the cheapest, most reliable way to learn instead of reading, excuse my French, but bullshit that's out on the articles that are out there, right? Excuse me if I can't cuss, but books are written by, credible people. Some of these books are written by very credible people that have walked these shoes and are billionaires and are millionaires. So it only makes sense to learn from them, right? And some of these books are $7, right? I have a huge book right here that's like 300 pages that was like $12, right? So books. And then the next thing you need to do, if you want to start an account, you have to open up what's called a retail account. Where, that's your Robinhood, that's your Webull, that's your Thinkorswim. You are considered a retail trader, okay? So that is how you can get started. And normally depending on which company you go through, they require a minimum to put down to be able to utilize their data. So example, TD Ameritrade, they require a $500 minimum requirement to open an account so that you get real-time data. And this is important in terms of if you're going to be a trader, because you want to have data now to be able to make your decision. You don't want to look at the chart that has a 20-minute delay and you're going to make a reaction based off of something that is now old, right? So as a trader and as somebody, you want to have that real-time data, and to get that, there's a small initial cost.
Okay. And then when you say data, are we referring to like charts mainly, or are you talking about like the like newspaper articles or that sort of thing?
So then the other component of trading is broken up into two categories when you're looking at it. There's the technical, okay, which as a day trader, swing trader, and option trader, you could get away with just having the technical knowledge. And then there is the fundamental piece, which is understanding the balance sheets, reports, looking at all of that. So when you're talking about news, that is somewhat of a fundamental piece. The technical piece will be looking at the chart. So when it comes to real-time data, it encompasses all of that.
Okay, that makes sense. Okay, good. So let's get into some of the drama, man. Let's get into the drama that's going on right now with Wall Street bets. So can you tell us a little bit about what's going on, or what happened with Gamestop, what happened with AMC, what happened with some of those stocks?
Yeah. So first, I think it's important to educate people on Wall Street bets and or forums, right? So this isn't something new. All right. This has been around for years, especially Wall Street bets. It's just most recently becoming publicized, right? There are many forums that are out there. There's stock twits, there's private Discord groups. I myself personally have my own Discord group where it's a forum for people to come and get education. But there are some forums that are out there that we call pumpers, right? Because their whole premise and purpose is to pump a stock, right? Where instead of providing education, they are telling their members, buy this, or buy that, or sell this. And this is important because you need to also understand the mindset of what is going on, because this is essentially what I would consider a semi-perfect storm, right? Where this past year specifically, I mean, my company as a whole went from 1,000 members to 5,000 within months, right? Because of COVID, right? COVID happens and you have all of these people at home, right? So now they have time. You also have people that have lost jobs. Oh, yeah? So there is a sense of urgency for some people to try to make money, where, you know, there's ads out there and there's people out there saying, you know, you could get rich quick. And I want to be honest with the members here, trading is not a get rich quick scheme. So I'm not somebody that is going to, you know, preach that. So, you know, I want to make that clear here that this isn't something that you can just do and follow somebody to say, buy this and make money. It doesn't work that way. You could definitely make money, but in the long term, you're going to fall short, which some of these people have done, and we'll talk about that. So these forums have been around. Now, in particular, Wall Street Bets, okay, I have 5,000 members in my group. However, we don't pump stocks. We provide education and we mentor you to learning about stocks so then you could become independent. In a forum like Wall Street Bets that has millions of people in it, if you go right now and you go to Google, you type in Reddit Wall Street Bets forum, it will take you to the link of Wall Street Bets, and you will see probably right now there's probably 800,000 active members that are typing within there, and you'll see that there's millions of members as a collective that are within that group. When a group has become that big, the control that you have over it also diminishes, right? So I don't know what the initial intent was for the Reddit group, but that is what happened. So then when you have a group that big, you also have influence. And when there is influence, especially when there's people that are feeling the need that they need to make money, right? Where people are trying to learn a way to make money from home, they have a certain influence on these people of saying, hey, buy this stock, we're going to make, you know, thousands and thousands of dollars, right? And of course, you know, the people that aren't educated, that don't know, are going to follow. And what is that going to do? It's going to drive the price of the stock up, especially on the other side of things, spectrum. You have sports that are no longer, some sports are no longer there, right? So then there's the bettors as well, who are the big players also, that are now using this as a form to make, and I want to make that clear too, trading and investing is not betting money. But there are some people that use it as that, and that is how this has been used, where people were reckless with trading these stocks, and they had the influence from WallStreetBets and the people within the forum to say buy, 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 and it drove this price up. Now, there were 3 big hedge funds that were shorting GameStop, and to give you a definition of shortings for those people that want a definition of shorting, and stop me at any time if I'm going too fast or if I'm, overgoing, the initial question, but it's a vague question. I'm trying to give you the whole spectrum of the answer. But for those people that are listening, there is a free website. It's called investopedia.com. It's a very credible website. You can get a lot of education there, and you can type in different things to get educated, such as shorting or trading or, anything related to the stock market. Okay, so to give you the definition according to Investopedia, and I'll give you an example, but what is short selling? Short selling is an investment of trading strategy that speculates on the decline in the stock or other security price. It is an advanced strategy that should be only taken by experienced traders and or hedge funds. And traders mainly look at this as speculation, right? So what happens is you borrow shares. You don't purchase them. You borrow the shares from the brokerage. And in order to short, you need to have a margin account. Now, what a margin account is, and this could be a really long conversation, so what a margin account is basically leverage. Okay, you are leveraged money from your brokerage in order to take certain trades. All right, so usually a well-established trader starts with $25,000, and when you start with $25,000, the brokerage would give you 4x leverage. So you would have $25,000 of your own money, but you would actually have $100,000 in buying power. Okay, so in order to short, you need a margin account. Now, depending on what your initial investment is, you will get some leverage from your brokerage. Okay. Now, the other issue that is happening here is that people are using, I have the leveraged money, but I never use that money. Okay. 1, you need to owe it back. Okay. And then 2, I never short, because I'll cover that risk here in a second. But there's a lot of people who took these certain trades that are now over leveraged. They can't afford to pay back that brokerage. Okay. And the issue with shorting, need to go back a little bit here more. There is something called going long, and then there is obviously something called going short. Now, if I can share my screen so it kind of makes sense, let me share with you guys here. I want to try to be interactive as possible here. Can you see the screen?
No, I just it's going to go live right now. I just want
to. Okay.
I'm going to take myself off real quick.
Okay. Do you want me to, let me see, maybe I could blow it up on a different 10 shares worth, so $1,000, and say the stock went down to $90. Okay. I would buy the shares back at that price, and I would make the money, which would be $100 profit. Okay. So the same concept here. All right. The issue becomes, though, is if I said that this stock was going to drop to 35, but it actually went from 74 to 100 or to 150 or to 300 or to 500, like in the case of GME or whatever. Where did GME go? Let me see. I'll go to the chart real quick. GME hit a high, if I remember, of 513. Okay. That is exponential loss that not only that hedge fund had, but also the people that were also short on it. So when you are short as well, there you have to cover your position depending on the brokerage and depending on the risk. There's also implied volatility. And I'm not going to get into all of this because this ends up being a very in-depth conversation. But with respect to the risk of the trade, the respect to the volatility, there is also, collateral that company has to take in, and then also the duration that they allow for that short to be covered. Okay, so when people cover a short, you buy back. So to a person that is just looking at this, they see a lot of purchases to buy the stock. These could be shorts that are buying their shares back, and new buyers coming in, and that is where you get a short squeeze that ends up driving the price up. So what happens here is you have three major hedge funds, Citadel, I can't remember the other two. They were just on the top of my head right now. Give me a sec. I'll give you it was Citadel, Malvin Capital, and Point72. Okay, all of which who had a public position that they were shorting. Okay, and then you have the Wall Street bet guys who were saying that they were going to go long, and they were buying options. So that's something a little bit more complex, but they were buying what's called OTM, which stands for out of the money option positions. Now for options, you can control 100 shares very, very cheap. So if I was to go in here and buy 100 shares right now at the current stock price, it's $85. So that would cost me a lot of money. 85 times 100, that is brain farting right now, right? That's $8,500, right? For somebody else that had an option contract to control that same 100 shares, it may only cost them a couple thousand or even a couple hundred, depending on what the premium that they got. And I'm not going to get all into that. But basically, all of these guys were on Wall Street Bets were buying these crazy out of the money options, and they were going against these people that were shorting that had to cover their position. It caused a short squeeze, which then rallied the stock to go up. And then you have other people from different forums seeing that the stock is driving up. For the person that is not educated or just other people, they're driving, also buying in, saying, hey, this stock is going up. I'm going to buy in to ride the wave towards the upside. And then you have this huge move going up. And then you have this out competes, right? Because what is going on a regular basis, like all this green and red you see here, is a difference between buyers versus sellers for a given time, right? So once you have all of this drive happening, you have an outcompete of the buyers versus the sellers, what is ultimately what drove this stock up. Now, what happened specifically with Robinhood and with them halting their trades is that Robinhood cannot cover the collateral that was required from the clearing house to take these trades, to cover these trades. So what they had to do was halt trading to restrict trading from these specific stocks. And there was a handful of them. There was GME, KOSS, AMC, NAKD, NOK, BBY, I think it was BlackBerry, and a few others, right? So the clearinghouse was asking for $1 billion, and because of how risky this was, they were asking for 100% upfront, right? So obviously with a small group like a Robinhood, they can't cover that. Whereas a TD Ameritrade halted trading, but they only halted it for an hour. They restricted the amount of shares that you can buy for the initial hour. This is to help reduce the volatility. But with Robinhood, because it restricted all users completely from being able to buy shares, And if shares being able to buy only a small handful of that, maybe like 1 to 10 shares, what started to happen was people were liquidating. That's what drives the stock price down. It's not people that are shorting, it's people that are liquidating their position. And so when you start to not be able to buy the shares, what is that going to do psychologically to the person that owns these shares? They're going to say, oh shit, I need to cover my position and cover my profit before I get trapped, right? And then if Robinhood, which has millions of users, right, and especially rookie users that are now liquidating their position, and you have the big hedge funds that are still wanting to short, that is going to exponentially drive the price of this stock down, which is what we saw here, right? This stock went from $400 down to $122 at the low. Okay, so it went from $400 all the way down to $100 within a span of, this was at 7:05 a.m. and this was at 8:20 a.m. So within the span of an hour, the stock went from a high of 470 all the way down to 119, and as the days progressed has dropped all the way down to 85, right? Because this initial move here was a panic move. This was people selling their shares, saying, take me out, I want to be out. If I can't buy anything, I want to liquidate. That is going to start a ripple effect to all other people that have a position. Now, once Robinhood did get their shit cleared, okay, because they ended up being able, Robinhood was able to raise $2.4 billion from shareholders, okay? This happened days after, okay, investors agreed to pump $1 billion into the online brokerage, okay? After they raised about $3.4 billion since last Thursday, they're obviously able to cover, and this is what we're seeing here. This is where we ended up later getting a rally from other people, and the other people that were in Robinhood ended up switching over to other brokerages like Webull, TD Ameritrade, and so forth. So then you saw this initial rally. But then as the day has progressed, people are just getting out of GME. You still have people shorting, and things are kind of more back to the norm in terms of requirements.
So what you're saying is that, like, is there a way to tell on that graph at what point were the hedge funds shorting the stock? So if I'm understanding correctly, it actually benefited them that essentially people started liquidating their, at some point they were in a bad position, but it sounds like at some point, because the stock started going down, they actually benefited from the initial shorting that they were doing.
Yeah, and then that's how so they benefited from people starting to liquidate, and they benefited from Robinhood restricting their users of buying more shares, so that their only position was that they had to liquidate, right? So when you're shorting, you're betting that the stock is going to go down. The only thing that's going to drive that stock to go down is the liquidation of those shares. So you can't see when somebody is shorting. You can just see the chart and what's happening. It could be somebody selling, or somebody taking a short position. But ultimately, since Robinhood restricted people from being able to buy, and that their only option was essentially to sell, it drove that price down immensely and started a panic. And then thus, yes, that is where the hedge funds were able to make money, because their short position and their initial hypothesis that the stock would drive down ended up coming back, and they were able to recover some of those initial losses that they had. And that's where this whole conspiracy thing is coming up, with Robinhood having, being in cahoots with some of these hedge funds that had an initial short position. But this initial short position happened, at the beginning of time. Like, I think Citadel, to look at my data here, Citadel in specific, had their short, months ago. It wasn't even this all became like a perfect storm again, as I said, because you had the people from Wall Street Bets, and then with Robinhood restricting. Now, if Robinhood was able to cover the funding, this would not be the chart that we see. We would not see it so low. We would probably still see people from Wall Street Bets and other people jumping in and driving this stock up. Okay. But because Robinhood restricted them, that is where the issue came. And that's where all of this kind of hot water is coming in with Robinhood as a whole, where the other brokerages didn't have that issue. They did halt trading for the first initial hour to kind of mitigate some of that volatility and kind of some of that pump and dump kind of mindset. But Robinhood completely, for days, restricted their users from being able to do anything.
So what you're saying is that it's not factual. Basically, what people are saying, that Robinhood was in cahoots with the big hedge funds, and essentially they did all trading on purpose to almost help out their buddies.
That is what the theory is because of what has happened. But when you look at the reality and you look at the financial aspect of it, Robinhood was so small for the positions that were being taken and the collateral that was needed. They could not financially cover the collateral and upfront payment that their clearinghouse was requiring. So they had really the only option that they had was to do what they did.
So essentially, there's probably no legal implication towards Robinhood. Now, is this something that essentially that they came out saying, that Robinhood came out and made a public statement about this, or is this
no? So then that's the other issue with this is TD Ameritrade, when they were going to restrict the initial hour, they only restricted the initial hour, which is why later you start to see the recovery. This only happened within the first hour. Okay. So this first hour, every brokerage just about was starting to restrict their members from being able to purchase GME, AMC, etc. Okay. And then that's why later after that hour, you start to see a recovery. Okay. And this communication was sent out immediately to those members of what was going on. Okay. And the move didn't start happening until the day prior, where you have this huge move go from $50 all the way up here to $350, and then in the after hours had a huge spike. Okay. So then that is where the kind of sense of urgency came for Robinhood, of where they have to come up with that collateral, right? So with TD, who uses a different clearinghouse, they had the funds to cover the trades, right? They were just kind of reducing that volatility, whereas Robinhood could not. Now, so because of that, they're in hot water. I think the CEO has a meeting with the United States Congress, but I'm trying to remember the specific term. But there's a meeting February 18th with that CEO of Robinhood in front of Congress to go over exactly what had happened and et cetera. So there could be some implications for them, but what they did is not illegal, and what Wall Street Bets and what other forums do is also not illegal.
Okay, cool. Well, I think that kind of clears up some of the waters, man.
Yeah.
Now, let me ask you this: were you involved in any of those trades personally? Like, did you ride the wave up or ride the wave down at all, or is that just not like the strategy that you utilize?
Yeah, so then that is what the other piece of this would be, right? To educate people on, don't just ride the wave and try to, mimic what other people do, right? I just saw on that same Wall Street Bets forum, and this is where that mentality gets into. There's somebody that's negative $400,000 right now on a position, and they're willing to hold that position in order for them thinking that this stock is going to go back up, and I don't think it's going to.
Wow.
At least not to 500, right? So that is some of the issue as well of having uneducated people just kind of jump in. For me, I use a strategy when I take my trades. And as a trader, my job is to manage and mitigate my risk.
Yeah.
So with that, you know, I usually only per trade spend anywhere between $10,000 to $50,000 on any one trade. And I'm only willing to risk a portion of that in terms of a loss. Okay. And that loss, it should only be less, anywhere between 1% to 3% of my total account. Meaning, if I had a $100,000 account, I can lose up per any one trade $1,000 to $3,000. Okay, that is what my risk is. How much I play with is irrelevant as long as I'm able, if the stock starts to go away from me, stay within my risk rules. So I did trade AMC and I did trade KOSS. On AMC, I think I posted it on my Instagram page. It was a $56,000 trade, but it was only for a small period of time. I did not get the full move. I traded KOSS as well, and on that trade was only $4,000 because I only spent 15 minutes trading the initial move. So then that's where the strategy piece comes in, where I'm only trading now, personally, 30 minutes to an hour a day, and I'm only looking to make anywhere between $1,000 to $5,000 because there's 252 trading days in a year. If I can consistently follow my strategy and make $1,000, that's $250,000 at the end of the year. If I can make north of that, then, you know, last year alone, I covered $2 million, where I'm only looking on my initial investment to try to make somewhere between 5 to 10%, making, again, somewhere between $1,000 to $5,000, depending on how much I'm playing with. So that is when you're asking, you know, did I trade this? Yes, but I came at it with a strategic approach. It wasn't just throwing money in because for the sake of it. And then today, as I was showing earlier, I took that trade on SAVA, which is a stock that had news. And this is something different than, you know, trading something that's just a pump, right? I'm looking at something specific. And here you can see I made $6,000, and you can see the two trades that I took on this position to make that money, right? So here was the initial move, and I'm only, like I said, trading the first 15 minutes. So I got in here, I bought 1,000 shares, so I spent $34,000 here when the stock was 32, and then later the stock went to $40. Okay, so it went $6 more than what I purchased it at, and I sold my 1,000 shares and I made that $6,000, right? Because it was a $6 difference. I made $6,000 there. And then later I got in, but I missed this entire move because I was out doing other stuff. And that's the other component of trading, where I don't have to be in here the whole day. If I made $6,000 today, and if I make $5,000 tomorrow, and then the next day, that money will add up. That's the other component with trading and investing, is fear and greed. Right. And this is what happens to people that are uneducated. They start seeing the greed aspect of people wanting to throw money in and start jumping in and make money. And then those people that don't know end up being sheep and end up being slaughtered, because the people that do know have a strategy and get out before that shit happens. And then now you have people like that guy on Reddit that's now negative $400,000 because he bought in at the high.
Let me ask you a question. For that guy, like, let's say he can't cover those $400,000 because it's leveraged money. Like, who's responsible for that? Like, does the trading account take a hit for it? Do they come lien his properties, or is this like a personal guarantee, or what happens after that?
No, yeah, he is solely responsible to come up with that money. That's why if you look at, you know, Robinhood, I don't understand why people keep using Robinhood, but if you look at Robinhood as well, from, I think it was a year ago, there was a kid, I think it was 19, or I don't remember how old he was. He had negative $50,000 shown in his account.
Wow.
He killed himself because of that. and it ended up being a technical error on Robinhood's side, and that was inaccurate. So he killed himself because he knew he couldn't afford that, and he was freaked out from what he was seeing, which ended up being a technicality.
Damn.
Now for this other person, okay, they are knowingly, there is no technicality issue here. They actually owe $400,000, and I don't know what. I didn't look at their entire option, what they were expecting the stock to go, what their strike price is. But if they're negative and at the end of their expiry, they owe that money. So that's where, you know, you are legally responsible, and that's where the problem becomes with margin accounts and trading on margin in shorting. If you don't have a risk mitigation, if you don't understand what you're doing, don't do it. And this is what can lead to that.
So essentially what you're saying is that, like, you'll have a certain ratio, and if it goes below, like, let's say the stock goes down instead of up, it automatically exits you out. You cash in on your losses, so you're mitigating your risk. Is that sort of what you're referring to?
Yeah, 100%. So when you do that, you can set up what is called a stop loss. So i.e., if I put in $10,000 on a stock that only cost $1 a share, it would cost me $10,000 to own that stock. Mm-hmm. I'm only looking for that stock to make a 5 to 10% move. So i.e., that $1 stock either needs to go to $1.05 or $1.10. Now I'm going to make 5 to 10%. Since I'm putting $10,000 in, I'm going to make somewhere between, if it hits 5%, $500. If it hits 10%, $1,000. Okay, easy money. Well, don't get that. Now, on the flip side of things, if that dollar stock goes to 95 cents, I'm going to say, take me out. Now, at that 95 cents, that is a 5% loss. I'm only going to lose $500. That $500 of my multi-million-dollar account is not even a percentage. Okay. Now, if I had a $100,000 account, $500 would be a 0.5%.
Yeah.
Okay. So that's where I was going to, based off of your total account. The trading rule is you should only risk being how much you can lose per trade, somewhere between 1 to 3%, and on the day, only risk 3 to 5%.
Yeah, that's awesome, man. Cool. Well, I think
that was a lot, dude. I know.
Say it again.
I said that was a lot of information. I know.
No, it's good stuff, man. Like, honestly, like I've been so involved with the real estate market, man. Like, you ask me anything about real estate, I can tell you inside and out, and I'm sure that you know this. But as it relates to stocks, what you would call naive, I'm learning a little bit more about it. But I wanted to kind of get a little bit of insight, and I obviously appreciate having somebody like you on the show. Is there anything else, Andrew, that you like to add that we might have missed that you think would add value to consumers?
The only thing, I mean, just final words again, just educate yourself.
Yeah.
Know what it is that you're doing. If you're in a program, the primary focus of that program should be education. It shouldn't be telling you what to buy, and those would be things that will be red flags, right? And really have a risk management style if this is for going into trading. Now, again, I talked about trading and investing, and there's different ways. Those are two different conversations. And in terms of investing, for somebody that's, working and can't be trading and in front of a screen for at least 30 minutes, and, wants to buy something and hold on to it for the long term, there's other platforms that are out there that can do that for you. There's, other companies that will that charge a very small fee to manage your account, like a Wealthfront or a Betterment, where you just make contributions to that account, and then that can grow over time. That is a different discussion than trading. So those two are different. They can both work together. So like for me, for my trading aspect, where I can make $1,000 to $5,000 per day, Once I make a accumulation of 100,000, that 100,000 then goes into my longer term investments that work themselves. I don't have to manage those. I just keep an eye on those. So there's different things that you can do. I would recommend to educate yourself. Don't read forums. Go get books. Go look at credible websites. So some of the credible websites, investopedia.com is a great source. Finviz.com is a great source. Marketwatch.com is a great source. Stockmarketwolf.com is a great source, right? So these are all different things that I would say to do first before jumping in and losing real money. The other last piece of this, for those of you who are watching and may be interested in trading and or investing, there is actually what's called simulators out there where you can practice almost like it's real life and work on your strategy to show that you can do it and kind of get the spider webs out before then using actual money. So that would be my other recommendation to you, is don't come in here like a dumbass and put $20,000 on a position and not know what the heck you're doing, because that $20,000 can quickly become zero.
So maybe practice on a simulator before it happens.
Yeah. Educate yourself, practice, and know what it is that you're doing.
It'd be awesome, like a real estate simulator. Yeah. Okay, this is how much you got to rehab it for.
Yeah.
That wouldn't be a bad idea. Cool, man. Where can people find you?
You can find me on my website, stockmarketwolf.com. For anybody that is listening and is military and or a first responder being a police officer, fireman, EMT, paramedic, we provide a portion of what we do for free. So we do have a beginner program that is for free for, again, military, active duty military veterans or first responders. For anyone that is a civilian, we have a beginner program that is very cheap. It's like $20 a month to get a education. It's a 3-hour course that you can take and get a lot of insight on the differences of trading and investing and understand how to read charts and understand the fundamental and technical aspects of it. And then there's also a group and community with other like-minded individuals. And again, the main premise of the group is for education. So you could go to stockmarketwolf.com and see that, or you could find me on Instagram at stockmarketwolf.
Awesome, brother. Thank you guys so much. This was episode number 50. Guest Andrew Diaz, Stock Market Wolf, trader and educator. So make it a great day, guys. Hope that you guys learned something, and look forward to doing more of these. Make it a great day.
All right. Thanks.